Hey everyone, welcome to Trader DNA. In this video, I'm going to share the simplest and proven profitable candlestick price action trading strategy that has a high win rate in both the Forex and stock markets. But before we get into that, please click subscribe and hit the bell icon so you don't miss out on any of my latest videos. So, without further ado, let's dive right into the video. In this trading strategy, we'll be using a special custom indicator that I provide for free to all of you. I named this indicator BB Stops. It's an incredibly powerful indicator because it's easy to implement with a simple concept, and it can accurately identify trends in both the Forex and stock markets. It's the simplicity of this indicator that helps its users succeed in maximizing profits in the market. So, this is how the strategy goes. The first step in this strategy is to identify the ongoing trend in the market. You can do this by identifying the color of the BB Stops indicator line on the chart. If the BB Stops indicator is green, it means there's a bullish trend, which indicates that you only need to look for buy signals. And if the BB Stops line is red, it means there's a bearish trend, which indicates that you only need to look for sell signals. Analyzing trends like this is very easy to do, so you won't have difficulty in consistently following this rule. BB Stops also provides fairly accurate trend signals, as you can see here. This is a short backtest as evidence that the BB Stops indicator can accurately and consistently provide trend signals. It's a great starting point for you as a price action trader. By using the BB Stops indicator, you no longer need to bother and be confused by the task of analyzing and determining trends before entering the market, following the existing price action signals. Entering the market with price action pattern signals. Price action pattern signals refer to specific patterns or formations that occur on price charts, providing indications of potential market direction or future price movements. Traders look for specific patterns in the arrangement of candlesticks, such as doji, engulfing patterns, hammer, shooting star, and others. These patterns can indicate market trends, reversals, or continuation of existing trends. Traders who use price action pattern signals often combine them with other technical indicators or analysis techniques to confirm their trading decisions. These patterns are considered valuable tools for identifying potential entry or exit points, managing risk, and determining the overall market sentiment. The best price action signals to combine with the BB Stops indicator. There are numerous price action patterns offered by trading course instructors out there. However, in my experience, there are only a few highly effective candlestick patterns that you need to understand and master. These patterns are widely recognized and utilized by traders worldwide. Some of the most popular patterns include double top and double bottom, triangle, Marubozu, pin bar, engulfing, and doji. Although in this strategy, I only use a few selected price action patterns, you are free to use any price action pattern signals that you have a good command of. Alright, let's continue our discussion and move on to implementing this trading strategy in real-life market scenarios. First, double top and double bottom price action pattern. The double top and double bottom are price action patterns commonly seen in charts. The double top pattern occurs when the price hits a certain level, pulls back, and then returns to that level again, forming two peaks around the same price zone. This pattern suggests a potential reversal from an uptrend to a downtrend. On the other hand, the double bottom pattern occurs when the price reaches a specific level, bounces back, and then returns to that level again, forming two troughs around the same price zone. This pattern suggests a potential reversal from a downtrend to an uptrend. On this chart, you can see that at the beginning, the BB Stops indicator line is green and sloping upward, indicating a bullish market. Then, the green BB Stops line starts to flatten, and the price forms a double top price action pattern. This is a clear sign that the previously bullish market is starting to consider and plan a change in direction to become bearish by forming the double top pattern. In this case, the double top price action pattern we're witnessing is like an important code from market participants worldwide, signaling that the market will soon change direction to bearish. Then, the green BB Stops line turns red after a bearish Marubozu candle forms. As I explained before about the BB Stops indicator, when BB Stops turns red, it's a sign that the market is bearish, validating the double top price action pattern we're observing. With the formation of the bearish Marubozu pattern, now is the best time to enter the market by opening a sell position on the next candle. In this case, the best place to set a stop loss is a few pips above the BB stops line. The minimum target is 3 times your trading risk. And the result is that the market starts its bearish trend quickly. On the contrary, we have the double bottom pattern. On this chart, if you're skilled in analyzing price action patterns, you'll notice the formation of a double bottom pattern below the red BB stops line. This means that if the double bottom pattern is formed perfectly, and there are additional supporting patterns when the BB stops line changes to green, it's the best time to enter the market by placing a buy order. Here, you can clearly see the formation of the double bottom pattern, accompanied by a bullish engulfing pattern that is further confirmed by a strong bullish candle, and the subsequent change of the BB stops indicator line to green. This is a sign that the market has started to shift to bullish. So now is the best time to open a buy position on the next candle. The best place to set a stop loss is a few pips below the swing low. The minimum target should be 3 times your trading risk. And the result is that the market quickly starts its bullish trend. Here are several locations where a double top and double bottom might occur, and they offer a great opportunity for traders to make substantial profits. However, it's important to note that these formations can also be found in other areas. The key to success is to diligently follow the rules we discussed earlier and maintain discipline in your trading approach. Second, triangle price action pattern. The triangle price action pattern is a technical analysis pattern that occurs when the price of an asset consolidates, forming a triangular shape on the chart. It is characterized by a series of higher lows and lower highs, creating converging trend lines. This pattern typically indicates a period of indecision in the market, with buyers and sellers battling for control. There are 3 main types of triangle patterns: ascending, descending, and symmetrical. Ascending triangle. This pattern forms when the upper trend line is flat, while the lower trend line is ascending. It suggests that buying pressure is gradually increasing, and a breakout to the upside is more likely. Descending triangle. In contrast to the ascending triangle, the descending triangle has a flat lower trend line and a descending upper trend line. It indicates that selling pressure is gradually increasing, and a breakdown to the downside is more probable. Symmetrical triangle. This pattern occurs when both the upper and lower trend lines converge, creating a symmetrical shape. It suggests a period of consolidation and indecision, with a potential breakout in either direction. Traders often look for a breakout from the triangle pattern as a signal to enter a trade. A breakout occurs when the price moves decisively above the upper trend line. It's important to note that the triangle pattern is just one tool in technical analysis and should be used in conjunction with other indicators and analysis techniques for more accurate trading decisions. As we can see on this chart, when the BB stops line slopes downward, we also identify a formation where lower candles tend to indicate an uptrend. Based on this price movement, the market forms a symmetrical triangle pattern, which signals to market participants that if a breakout occurs on either side of this pattern, the market will move further. Shortly after, the green BB stops line is formed, indicating a price breakthrough of the upper triangle, represented by the red line of the BB stops indicator in this case. Therefore, once the green line is formed, we can open a buy position after a bullish doji formation. We can place the stop loss below the nearest swing low, with a profit target of 3 times our trading risk. Then, as the price moves up, it gives us a very satisfying profit before forming a second triangle formation that invites us to enter the market by opening a buy position. After placing the stop loss below the nearest swing low, the market enthusiastically provides us with a tremendous profit. Next, on this chart, we see the green BB stops line, indicating that the market is bullish. If you look closely, you can clearly see that the market is forming an ascending triangle. This pattern occurs when the upper trend line is flat, while the lower trend line is ascending. It suggests that buying pressure is gradually increasing, and a breakout to the upside is more likely. Then the price easily breaks above the upper line, indicating that the bullish trend will continue, and we should enter the market by opening a buy position. We place our stop loss below the nearest swing low, and set our profit target at 3 times our trading risk. Subsequently, the price quickly races to continue the bullish trend that had already been established. And now, on this chart, we see the red BB stops line, indicating that the market is bearish. If you look closely, you can clearly see that the market is forming a descending triangle. In contrast to the ascending triangle, the descending triangle has a flat lower trend line and a descending upper trend line. It indicates that selling pressure is gradually increasing and a breakdown to the downside is more probable. Then the price easily breaks below the lower line, indicating that the bearish trend will continue and we should enter the market by opening a sell position. We place our stop loss above the nearest swing high and set our profit target at 3 times our trading risk. Subsequently, the price falls quickly, continuing the bearish trend that had already been established. As we observed in the examples we discussed earlier, we can conclude that the BB stops indicator greatly simplifies the analysis of ongoing price action in the market. It's undeniable that the BB stops indicator is highly reliable and consistent in generating signals, making it a valuable tool for both professional and novice traders. It offers accuracy and signal consistency, along with the convenience of reading market trends. Alright, let's briefly delve into how we handle price action candle signals using the BB stops indicator. Let's analyze what we have on our chart. First, we observe the formation of a bearish doji. We refer to it as a bearish doji when a doji candle is followed by a bearish candle. This indicates a bearish signal, and we should enter the market by opening a sell position on the next candle. On the other hand, a bullish doji refers to a doji candle, followed by a bullish candle. This indicates a bullish signal, and we should enter the market by opening a buy position on the next candle. Therefore, after the bearish doji is formed, we should promptly enter the market by opening a sell position here. We place our stop loss above the red line of the BB stops indicator, with a profit target of 3 times our trading risk. Then the price starts to move downwards, and we observe the formation of a bearish pin bar. A bearish pin bar is a candlestick pattern that occurs when the price initially rallies, but then reverses and closes near its low. It has a long upper shadow and a small body near the bottom. The presence of a bearish pin bar suggests a potential downward movement in the market, indicating that sellers have gained control and the bullish momentum may be weakening. Conversely, a bullish pin bar is a candlestick pattern that forms when the price initially declines, but then reverses and closes near its high. It has a long lower shadow and a small body near the top. The appearance of a bullish pin bar indicates a potential upward movement in the market, suggesting that buyers have strengthened and the bearish momentum may be fading. Therefore, after the formation of the bearish pin bar candle, we should promptly enter the market by opening a sell position. We place our stop loss above the red line of the BB stops indicator, with a profit target of 3 times our trading risk. Then the price continues its bearish trend, moving downwards, and we observe the formation of a strong bearish engulfing pattern. A bearish engulfing pattern is a candlestick pattern that occurs when a small bullish candle is followed by a larger bearish candle that completely engulfs the body of the previous candle. This pattern suggests a potential downward movement in the market, indicating that selling pressure has intensified and overpowered the previous buying momentum. On the other hand, a bullish engulfing pattern is a candlestick pattern that forms when a small bearish candle is followed by a larger bullish candle that completely engulfs the body of the previous candle. This pattern suggests a potential upward movement in the market, indicating that buying pressure has strengthened and overpowered the previous selling momentum. Both bearish and bullish engulfing patterns are considered strong signals as they reflect a significant market sentiment. Therefore, after the formation of the bearish engulfing pattern, we should promptly enter the market by opening a sell position. We place our stop loss above the red line of the BB stops indicator, with a profit target of 3 times our trading risk. Subsequently, the price continues its bearish trend, and all our profit targets are successfully achieved. You can even achieve exceptional profits by implementing a trailing stop that follows the color changes of the BB stops indicator. So, we have effectively demonstrated the incredible power of the BB stops indicator. By following the trends identified by this indicator and utilizing price action patterns as signals, we can achieve remarkable profits in the market. If you wish to use the exact settings of the BB stops indicator shown in this video, you can download them from the description. I have included the indicator and template in the trading system, making it easy for you to upload them to your chart. It will accurately display all the BB stop settings on your charts, so there's nothing for you to worry about. Get the download link in the description. As always, if you found this video helpful and would like to see more frequent content, be sure to subscribe, click the notification bell, and share this video on WhatsApp, Facebook, or Twitter to show your support. See you next time.